So friends, till now we have covered the definition of partnership under the Indian Partnership Act 1932. We have seen the features of partnership. We have also seen the distinguish between partnership and other forms of organization. We have done what is mutual agency, and then we went on to cover the types of partnership. In today's segment, we'll cover what are the different types of partners. Our last topic was the different types of partnership. So we said there are two types of partnership. One which is partnership at will, other which is a particular partnership. And particular partnership is again segregated into two parts: partnership limited by purpose and partnership limited by time. So now we'll cover what are the different types of partnerships. So let's start. The first type of partnership, rather the first type of partner is active partner, working partner, or ostensible partner. Now, normally when you see people doing business in partnership, they go to their office, they do business, or they provide some services, they make revenues, they share the profits. Such people are called as active partners. Now, why are they called active partners? Because they are active into the business. They actively carry out the business. They are working partners because they are the partners who work, who do the work. They are also called as ostensible partners. Now, ostensible means what? Ostensible means to show. This word is majorly used for rich, snobbish people. Some rich people have a tendency to show off their richness. So they wear big diamonds, they carry very pricey cell phones, very luxurious cars. So what they are doing is they are showing off. So we, in a statement, if I tell you, we call them ostensible people. They are ostensible people because they show off. In the same context, these partners are also called as ostensible partners. Why? Because they are the working partners. They show up at the office. They do the work there. People can see them working. So for the partnership, they are the ostensible partners in the view of outsiders. So this is the most basic category of partners. These are the normally partners that you see around who work for the partnership. They are the persons who do the actual business, who talk to the suppliers, get the materials, who sell the goods to the customers, get payments from them, pay to their suppliers, pay for their expenses, distribute profits, etc. So this is the type of partners which is generally seen around. Or the second type of partners, it is, so I'll just write here, partners who actively do business. Yes, sleeping, passive or dormant. Now, from the words only you can understand, these are sleeping partners. That is, they don't work, they are dormant. Dormant means again sleeping. Passive again means, out of life. They don't have life. They are passive. Active means somebody who does activity, and passive means who is not doing any activity, who is not doing anything for the partnership. So this is the kind of partner which only gives his capital to the partnership. Many times what happens is, there's a person who is inclined to start a business, but what happens is he does not have money. So he goes to some rich person and tells him that you invest money in my business and I'll give you 50% of the return, or I'll give you 60% or 30% or whatever the rate may be. So now what are they doing? This first person will do the business. He will be solely responsible for the business. However, the other person, the second person, will invest capital, but he will not work. He will be a dormant partner. And he'll take the share in profits at whatever rate or ratio that is agreed. So, this partner does not work. He is dormant, he is passive, he is sleeping. The first partner, active partner, does the business. He only invests capital. He only invests capital into the firm, does not actively engage in business. Okay. The next type of partner is nominal partner. Now, from the word nominal partner, you may assume that he is probably not at the same level, as the other partners are. He is just a nominal partner. No, it is on the contrary, the opposite of it. He is the partner who lends his brand, his image, his goodwill, his name to the firm. However, he does not invest capital, nor does he take part in the activities in the business of the firm. He does not take care of the day-to-day, activities, and he does not look after the business. But what he gives to the partnership is his brand, his name, his goodwill, his image, his reputation. Now, one such example that I would like to give is, Sachin Tendulkar. He has a superb brand value. Possibly he has the most number of fans in India. So now, many people try to cash on in his name. One such example was, a chain of restaurants was started with the name Tendulkar's, and Sachin promoted it. However, he did not invest any capital into that business. He was not responsible for day-to-day activities, for the business, for the accounts of the concern. He was just concerned with the share in profits. So what he had done is, he had given his name to the firm, and in return, whatever profits the firm would make, he'll get the agreed rate of profit or agreed ratio of profit. So this is one of the examples. Again, you would have seen, you get those Tetra packs by the name Sach, SACH, Sach. You get juices in them. So again, Sachin has been promoting them. Now again, Sachin does not make juices. He does not have a business of making juices and selling juices. However, he's only lent his brand value, he's only lent his name to the firm that is making juices. Now this becomes a shortcut for the firm to make money. It does not need to build a brand. it already has a brand and people know that brand. So, people just by the brand go and buy that product. They know Sachin Tendulkar. They know he is, a very reputed person. He's a nice person. He is never cheated in cricket, and he's pretty honest and all that stuff. So he's created a brand for himself. Now he's lent that brand value to the concern. Now that concern uses his brand. So people think, okay, since he's very good, this juice also might be very natural. It may be full of nutrition. So people go and buy that juice. So now what happens is that juice company is not required to build up, because it takes a lot of time to build a brand. It takes 10 years, 15 years, 25 years to build a brand. But here they are getting a ready-made brand. So they take the brand and in return give them a ratio of profit. So now that person only gives the brand, takes the profit. He does nothing else. He does not invest in the business, nor does he take part in the regular activities of the business. So there are only two things that a nominal partner does. He lends his name or brand to the firm against a share in profits. Along with this, invests no capital. Along with this, doesn't take part in business. So he only lends his name, his brand to the firm and takes profit in return. He does not invest capital. He does not take part in the business of the firm. The next is partner in profit only. Now this is a very, I would say a mean type of partner. He comes to the partnership, acts as a partner. He does everything normally as a partner, but with one additional condition. With one condition which is apart from the normal stuff. It is that he will share only the profits. If there are profits, he'll take a share out of it. If there are losses, he will not contribute a share in the losses. He'll only take a share from the profits. He'll not give a share when it is loss. So let's say there are three partners, each with a capital of 1 lakh. Okay, and they agree to share the profits equally. So after an year, if the firm has a profit of 30,000, so each of them will take 10,000 rupees. So everybody will get equal share. 30,000 by 3 is 10,000. So 10,000 to each partner. But let's say there was a loss of 30,000. And there's this third partner. Let's say there are three partners ABC. There's this third partner C, who's a partner in profits only. Now there's a loss of 30,000. How do they share? The partners A and B will have to share it equally. 15,000 and 15,000, because C will now not be sharing losses. So 30,000 will have to be divided by 2 now, and A and B will share it. So such kind of partners who only take a part of profits, take a share on profits, but do not contribute to the losses, are called as partners in profit only. Normally what happens is, whatever capital they have brought in, if there is a loss, the partner's capital account is debited. So the capital reduces. But partner in profit only, he'll not take the debit entry. He'll say, boss, I am not going to contribute towards the loss. Therefore, the loss does not get transferred to my account. You both have to share it. So 15,000 will get debited to partner A's account and 15,000 will get debited to the capital of partner B's account. So both of their capitals will get reduced. Partner A will remain at a capital of 85,000. Partner B will be left with the capital of 85,000 after the year, whereas partner C will be left. He'll remain constant. His capital will not change, and it will be at 1 lakh only. So you see that whenever there's a profit, he'll take the share in the profits. But when there's a loss, he'll not contribute to the loss. Takes share in profits, but does not contribute to losses. No liability for losses. So if there are liabilities, he has no. If there are losses, he has no liability. The next is sub partner. Sub partner. What does sub mean? Sub means one level down. Like we have agent and a sub agent. The agent of agent is called as sub agent. Therefore, partner of partner is called a sub partner. Now I'll tell you how. Partner of partner. Now assume that there are three partners A, B, C in this firm. This firm is measures ABC. So this is one partner, B is another partner, C is third partner. Now what has happened is there's this person D and C has appointed D. C has negotiated with D. The thing is, these three partners have started a business of selling let's say shirts. They take online orders and then deliver them. So A is responsible for procuring the goods. He purchases the shoes. B takes online orders. B is responsible for getting the sales online. So he has set up this website and he has kept a server and he has made a payment gateway and all those stuff. So B is responsible for that. And C is responsible for delivery. So in delivery, he is, he gets the stuff. So he has to, pack it and post it to the whoever the buyer is, wherever he is. So now C tells D that I in this firm am responsible for delivering the goods. Now I myself personally do not have a big network. So you go and deliver the goods. I'll give you the packed goods, you go and deliver the goods. And if you do so, I'll share 50% of my profits with you. Now what is happening is a separate partnership is being created here between C and D. You can see a separate partnership. I'll change the ink for you to be clear. a separate partnership here is being created between C and D, and this separate partnership is called as sub partnership. Now D is a partner of an existing partner. C is a partner in the firm ABC, Messrs ABC, and D is his partner. Now D is not a partner in the firm Messrs ABC. He is only a partner of a partner. If he becomes a partner in the firm, then there will be four partners. Then D will not be the sub partner. D will be sub partner only when he is in negotiation with C. There is only one-to-one relation with C and not with the firm. So D is not concerned with the firm. D is only concerned with C. Whatever share C will get, he'll have to share it with D. So let's say the profit sharing ratio is 2:1 between them. Now, and let's say they earn a profit of 50,000. So 50,000 by 5 units is 10,000. So C will get a profit of 10,000. So out of this, he'll have to share 5,000 with D. So this is how it is. Whatever share C gets, he'll have to share it with D. And D is concerned only with C's share. He is not concerned how much A is earning, how much B is earning, what is A doing, what is B doing, is the firm doing good, or all these things are irrelevant to D. He is only concerned with C's share in the firm because he has a ratio defined on C's share. No, students generally mistake D in this case as a partner in this firm. So what happens is they think that now there are 4 partners in the firm Messrs ABC. No. Still there are only 3 partners, but C has entered into a sub partnership with D. D is a partner of a partner in the firm. D is a partner of C who's already a partner in the firm. So this is sub partnership. Next is partner by holding out. Now we'll discuss partner by holding out in detail in our next slide. This is partner by stopping. So both these topics will be done in detail in the next slide. Then there is secret partner. Now what is this secret partner? Many times the firm does not declare that some X person is a partner in the firm. Let's say there are 4 partners in the firm, A, B, C, D. However, the firm acts in such a manner, discloses facts in such a manner that nobody comes to know that D is a partner. It purposely hides this fact that D is a partner in the firm. It does not disclose this fact. Now, there may be many reasons, wherein a firm may choose to not to disclose about a certain partner. It may choose to keep it a secret. Now, possibly what happens is, let's say a partner is a politician. So what happens is a lot of people don't like to do business, with firms who have politicians as well, because politicians are, they come with a reputation of being hardliners. Let's say if you pay them late, they'll come to your door and with the goons and all. So people always try to be away from politicians. So if such a firm who has a politician in it as a partner, it may want to hide this fact. Now, this is just one of the possibilities. There may be any reason. if one of the partners is suffering from some terminal illness like AIDS or cancer or some mental disease. So in that case also the firm may not like to disclose this fact that such and such person is a partner. People may avoid transacting with such firms. So this is what happens when firms avoid to disclose this fact, and when firms avoid, they do not disclose this fact that some person is a partner who actually is a partner, but the firm does not disclose it. Such a partner is called as a secret partner. Now the important thing about secret partner is, since people do not know him, he is not liable to them. He is not personally liable to them. If the firm is transacting with some suppliers who supplied material, now if D is a secret partner in the firm, that means the firm has kept this fact as a secret that D is a partner. So it is easy to understand that suppliers would not know that D is a partner. So in such a scenario, if the firm defaults, the suppliers cannot come to D and ask for the money. They cannot, because they do not know about D. Even if after some time they come to know, after transactions they come to know, then also they cannot come to D and ask for money, because when they had transacted they did not know about D. They had transacted with the firm assuming there are three partners. So it removes the personal liability of this partner towards the outsiders. Though he'll be liable for the debts of the firm, but outsiders cannot come to him directly, personally, and ask for debts. Okay. And finally, we have a minor partner. So I'll just write for this. Yeah. Secret partner is not known to outsiders. And who's a minor partner? Partner who has not yet reached the age of 18 years. We've done this many times. Minor is a person who has not yet reached the age of 18 years. This is the definition that is given in the Indian Majority Act. So he is a partner who is still a minor, who is not grown into an adult yet, but he is admitted to the firm for the benefits of the firm with the consent of all the partners. That firm should be an existing firm. And finally, minor should not be liable for any losses in the firm. Okay, so he stands with no liabilities. So we have covered active partner, we have covered sleeping partner, nominal partner, partner in profits only, sub partner, secret partner, and minor partner. The only two types of partner that remains to be discussed is partner by holding out and partner by stopping. So let's discuss them.